you may see a quick pullback, in Q1, and we're back to the races again because of all this other money that's going to say, I got to get back in. And if you look at all these corrections in the world of computer traded algorithms and ETFs and passive money, and it's all, the snapbacks are so fast. You correct 20% and then whoop, you whip it back and you go.
The latest inflation data came out yesterday, and it was again the worst we have seen in 40 years. Crypto investors, alongside growth and innovation investors, have seen their portfolios plummet over the last 3 months, as it looks increasingly likely that the Fed will raise rates to combat out of control inflation. However, in his latest livestream, billionaire investor Chamath Palihapitiya explains why he believes that the majority of the selling that this has caused is now over, and why he expects a swift recovery into 2022. Chamath, who has been a long-time Bitcoin bull and early investor, breaks down why he flipped so bearish in Q4 of 2021, and now why he is now flipping bullish into the remainder of 2022. Make sure to stick around to the end of the video, where I will break down some of the latest on-chain Bitcoin data to see where the price is likely to go in the short term. Here is Chamath breaking down his macro view.
They have a little bit of a track record of this. So in 2018, it looked like there was going to be inflation, and Powell tried to get ahead of it, and he raised rates, and the market completely collapsed. And they were looking, I think, at Chinese data at the time, and it looked like, China was turning, going crazy. Then China completely turned over. It was a complete head fake. The economy wasn't rip-roaring. Inflation didn't exist. And they basically just curtailed a lot of investment and destroyed a bunch of value. So this time around, I think they're very sensitive to not correcting too quickly. But then the opposite thing happened, which is they probably waited a little too long. And now, we're correcting too slowly, too late into the cycle. And we're just sort of digesting that reality. And so I think that, we're probably, to be honest with you, we've puked it all out for the most part, in my opinion. You have to remember, right? The big difference between now and even 10 and frankly, more importantly, 20, 30, 40, 50 years ago is how many computers are involved that trade, how much passive money is involved that owns assets, and how much of this stuff is sitting on the sidelines still in money market accounts and munis. So if you look at those markets, there is a ton, trillions of dollars waiting to find a home. And what we've now done, and Brad's charts show this, is we've basically chopped the head off of all of these fast-growing growth multiples. The underlying companies have not changed one scintilla, right? These companies are still growing by crazy amounts. Like Snowflake is still an incredible business.
Unbelievable.
But the multiple that one was willing to pay has been very much re-rated, as is a bunch of other companies.
So let me ask you a question, Chamath. If we've gone from these 50, 60, 70 multiples times sales, and now it goes back down to 20, is that, dare I say, a buy signal? Well, and will those trillions of dollars start moving back in? Because who wants to be in a money market?
I don't know, and I can't really call these things. But a really smart person that I talked to this week, he actually liquidated everything in October and November. And I don't know. We talked about this on the pod, but I was feeling so much tension at the end of last year. I actually, when I look back on Q4. It was probably the most difficult quarter of my professional life in just trying to manage risk. And I exited a ton of positions. All my pipes, my third-party pipes, I basically sold off except for one. I generated some liquidity in other places as well. And I was glad that I did that, in part because I saw, what he was doing, and in part because, Jeff and Elon were selling. And I thought, this is crazy to sit on the sidelines and be the bag holder here. Going into Q1, I talked to the same guys, and what he said to me, which I think is very smart, is you have to really look at the first and second derivative of the 10-year bond. Because when that stops moving, like the 10-year bond is this beautiful barometer of the collective wisdom of every single investor in the world about what they think about long-term growth and inflation. And it's a really important market. We've talked many times. Look at the 10-year break even if you want to understand where inflation is going. We started to talk about that 7 months ago. And if you look at that, the rate of change, so the volatility in the 10-year yield is slowing way down. And if that continues to hold, that means that people are really saying there's a small amount of real inflation, a reasonable amount of transitory inflation, and we're about to kind of wash most of it through the system with, 100 basis points of rate hikes. And if that's the case, then you may see a quick pullback, in Q1, and we're back to the races again because of all this other money that's going to say, I got to get back in. And if you look at all these corrections in the world of computer traded algorithms and ETFs and passive money, and it's all, the snapbacks are so fast. You correct 20% and then whoop, you whip it back and you go.
I guess my big prediction for business losers this year were asset classes that were highly dependent on liquidity. You guys predicted crypto would be one of those. Clearly, it's taken a massive hit. Have you seen how much the crypto markets are off just in the last week? So it's
so much for them being uncorrelated.
No, it's highly correlated. Look, the crypto markets.
Bitcoin's going to be uncorrelated, so the market's going to go down.
The crypto markets are like a sponge for liquidity, and the more liquidity there is out there, the more money can flow into a more speculative asset class. But look, my objection to this, is that if you look at the Fed's actions, I think Chamath is right that they waited way too long to react. And during the crisis, they overreacted. They pumped. We on a previous pod, we showed the assets.
They vacillate between underreaction and overreaction.
Yes, exactly. Yeah. And now they're going into overreacting again. Yep. I actually think they nailed it in mid-December. They nailed it by giving us business certainty around what the new rate environment was going to be. And just 3 weeks later, in the minutes to that very meeting, they completely undermined the certainty or the greater level of certainty and predictability that they had provided markets. They've now introduced massive uncertainty. So it's unbelievable.
It's like they're pilots and they stalled the plane and then they're like, let's pull back.
Well, no,
stall it some more.
They're kind of pulling out the manual and learning in real time.
Yeah. And it's like, you need to just point the nose down a bit and add a little bit of speed so you get some lift. It really is tragic. The
performance of our government at every level since COVID at the last, since 2020, it's been abysmal. First you have the self-inflicted wound of lockdowns. The economy was going to take a hit no matter what because highly at risk people would have stayed home and reduced their economic activity. But instead of just protecting the at-risk people, we had to lock down the entire economy. We padlocked Elon's factories and on and on. So we basically shut down the whole economy for no reason. And states like California kept it going way longer than they had to. So then the government just prints like 5-6 trillion and the Fed doubles the size of its balance sheet. And then now they're abruptly getting off drugs. Look, they put us on drugs and now they're going cold turkey. And so I think there's actually a much greater risk now of the economy going into recession this year because of the Fed's overreaction this week. They had the Goldilocks scenario down about 3 weeks ago, and I think they're going to tank the thing now. Or there's a much greater risk of that.
So there is Chamath with why he believes we have now seen the worst of the selling. To give credit where credit is due, Chamath was given a lot of flack for suddenly flipping very bearish in the second half of 2021. However, with the benefit of hindsight, he timed this move to near perfection. Do you think he's got this prediction right? Let me know in the comments. Now, looking at some of the latest on-chain Bitcoin data, some data that potentially backs up Chamath's thesis that selling is over, if not close to over, at least for Bitcoin, is the supply shock ratio. The supply shock ratio measures how much Bitcoin is being held by strong holders or in cold wallets. As you can see, despite the dip, the supply is continuing to be stacked by long-term Bitcoin holders, which is a clear bullish signal. If this trend continues over time, price really only has one way to go. Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next video, and as always, have a great day.